Let's go Tom Piotrowski over at CommSec for a look at the markets today. So how are we shaping up today, Tom?
Well, sadly, Pete, we might see a six-day winning streak come to an end today. The futures are suggesting that we'll be down by a little over a third of a percent when trade gets underway. So all good things must come to an end, apparently. So I suppose you understand that a little better when you look at the performance of US and European markets overnight. Over the course of the last couple of sessions, the momentum has tended to wane for the recent improvements. It makes sense when you consider where the S&P 500 has come from on Wall Street. It's risen by more than 20% since its lows in April. So that's quite the rally. It's now several percent above the levels at which the tariffs were announced in early April. So it needs to do a little bit of work here for investors to perhaps just reflect on the current state of risk acceptance, I suppose. So overnight you had the S&P 500 up barely by 0.1%. The Dow was down by around 0.2%. The Nasdaq up by a third of a percent. You've mentioned President Trump's trip to the Middle East, which continues to bear fruit on the trade front, Pete. There was a big deal announced between Boeing and Qatar Airways. Qatar Airways is going to buy up to 210 wide-body aircraft. So that will apparently create 400,000 jobs back home in the United States. So Boeing shares only up by 2/3%. But to highlight my earlier point in terms of where these markets have come from, Boeing shares are up by 23% from the lows of last month. GE, which will help out making the engines, up by a third of a percent, but that stock up by 20% in the last month. So today's a big day locally because we'll have the unemployment report released. So this is important from the vantage point of next week's prospective rate cut. The markets have priced in a near 100% chance that the RBA will cutting rates next week. So these numbers, if they're strong, and they could be, the whisper number is that we could see up to 40,000 jobs created, Pete. The market's only expecting 22.5. That could make for an interesting morning.
Oh, yeah. It's back to resilience, doing ever so well on that front. And that would have an effect on the amount of rate cuts, would it? No doubt. I mean, just a further point to that, Tom, I mean, because things have rebounded, markets have rebounded, tariff talk has come back a bit. You know, there was an expectation that there could be 5 rate cuts this year. What's the expectation from CBA's point of view? It's come back to 2, is it, long term?
Yeah, we're expecting 2 rate cuts in the near term as far as the RBA is concerned. But again, it hinges on today's numbers, Pete. If you see some very strong ones, then that calculation might change. But it's a pretty fluid landscape when it comes to rate cut expectations because of the growth trajectory that has been so clouded by the tariff discussion, and it's very difficult to pin one's hat on forecasts at the moment. So that's part of the reason why you're seeing all of these volatile markets.
I always thought it was ambitious. I think it was one of the other guys, NAB or Westpac, that thought there'd be 5 over the course of the next year or so, which I thought was pretty ambitious. And there you go. Tom, we'll leave it there.
If you're seeing economic growth fall off a cliff, then then you can make a case around rate cuts. But 5 is certainly aggressive.
Yeah. All right. Talk to you in a few hours, Tom.